Picture the moment when everything changes. The moment when you finally overcome the single greatest obstacle standing between you and unlimited trading profits. That moment exists, and it's closer than you think. Once you understand and conquer this one fundamental challenge, you will be able to pull money from the markets consistently and predictably. You might wonder what this magical element is that you need to overcome to find consistent profitability in your trading. The answer lies in understanding the human condition itself. The reason most traders fail has nothing to do with charts or strategies. They fail because they never learn to understand the deeper layers of themselves and how to control their behavior to achieve consistent profitability. This brings us to the crucial question. What exactly is the human condition, and how can we tackle this complex problem? Today, we will explore the 8 traps of human psychology that destroy traders, and more importantly, how you can overcome them to find consistency in your trading results. Just by having a deeper understanding of these psychological patterns, you will position yourself light years ahead of other traders who lack this critical information. These concepts alone were responsible for transforming me from a failed and struggling trader into someone who consistently pulls over $10,000 per month from the markets. Let's begin with the first psychological trap that captures almost every trader. You fear losing far more than you enjoy winning. I'm certain you have observed this pattern in your own trading experience. Having a losing day hits emotionally much harder than having a winning day provides satisfaction. This happens because when you experience a winning day, your mind feels at ease and content. However, when you have a losing day, it triggers your primitive brain in a very profound way. The way that taking a loss affects our brain involves raising cortisol levels and triggering deep emotional responses. If you carry buried emotions about not succeeding in trading, or emotions of feeling unworthy, or emotions of fear and inadequacy, then taking a loss will actually trigger these deeper emotional wounds. Taking a loss goes far beyond just losing the actual monetary value involved. This explains why it becomes so difficult for you to take a loss, even when you logically understand that by accepting losses and dealing with probabilities, you will come out ahead over time. This is exactly why you engage in revenge trading and become extremely frustrated. The impact goes far beyond just losing that monetary value. As I mentioned, taking losses also raises your cortisol levels significantly. This puts you into fight-or-flight mode where you no longer think clearly about anything. How many times have you been trading and found yourself in such an emotional state that you completely stop seeing anything clearly? You stop seeing the charts clearly. You stop seeing the risks you are taking clearly. You start randomly pressing buttons without any logical thought process. The further you spiral down this emotional path, the harder it becomes to pull yourself out successfully. Have you noticed how incredibly difficult it becomes to walk away when you find yourself in one of these states of high cortisol and intense emotions? This destructive cycle usually starts with taking a loss because your brain interprets it as a threat to your very survival. It raises cortisol levels dramatically and triggers deeply buried beliefs and emotions. You need to become very aware of these psychological mechanisms because if you remain unaware, you will never understand why taking a loss feels so impossibly difficult. To become a successful trader, you must become skilled at losing gracefully. You need the ability to take a loss directly on the chin, walk away from your screen completely, and return the next day when you have reset your emotional state. I consider this one of my core teachings that I want to share with people. Simply by walking away from your screen, you save yourself enormous amounts of money. I have noticed in my own experience that it requires several hours to calm down after taking a couple of losses in a row. Several complete hours of recovery time? If I were to continue trading through that period in a state of high emotion, it would only be a matter of time before I did something extremely stupid and destroyed my account. This happens simply because you become emotionally triggered. You are no longer operating in a state of emotional equilibrium, so you cannot make clear and intelligent decisions in those moments. The other concepts I will share with you will help address this problem of being unable to take losses effectively. This brings us to the second massive trap that traders consistently fall into. They crave certainty in an inherently uncertain game. This connects directly to the inability to take losses well. We desperately want the certainty that when we enter a trade, price movements will go in our favor. Unfortunately, this certainty simply does not exist in trading. This explains why beginner traders spend countless hours searching for the Holy Grail when it simply does not exist. If you have participated in markets long enough, you understand that no perfect system exists. Some people cling to the illusion that they can discover a trading strategy that works almost all the time. Even if you found such a strategy, you would still make execution mistakes. You would still approach the charts some days without seeing things clearly. The human condition and human brain naturally crave this sense of certainty, so it feels completely normal for traders to become frustrated and annoyed when they cannot control the result of any individual trade. The major problem emerges when we cannot control outcomes, so we try to force things that cannot be forced. This leads directly to overtrading, oversizing positions, and moving stop-loss levels inappropriately. For example, imagine the trade is moving toward your stop-loss level. You desperately want to control the outcome of this trade to turn it into a winning position. You know, based on your predetermined plan, that you should allow it to hit the stop-loss, accept the loss gracefully, and move on to the next opportunity. However, this becomes extremely difficult to execute because the mind is naturally wired for certainty. It wants to be completely certain that the trade will reverse direction and win back the money. It absolutely does not want to accept a loss based on the first psychological trap we discussed. These two psychological forces working together lead us to try forcing outcomes that simply are not there. So if you do eventually take that loss, what happens next? You immediately re-enter another trade, trying to make your money back quickly. You want to control that outcome desperately, but you cannot control market movements. When you cannot control the outcome, it leads directly to feelings of frustration and tilt. I would say the biggest bottleneck for traders all over the world involves frustration and tilt. I am not immune to these feelings. Nobody remains immune to them. Every single person will experience these emotions. There is not a single trader anywhere who will never feel tilt or never feel intense emotions. You need to learn how to deal effectively with your frustration and tilt, which we will explore in greater detail as we continue through these concepts. The third huge trap that traders fall into involves building bad habits that simply repeat over time. The more frequently you take a certain action, the more likely you become to repeat that same action in the future. In this case, you essentially choose which spiral direction you want to follow. It works very simply. If you continue making bad decisions like oversizing positions, going off your predetermined plan, or overtrading setups, then you become far more likely to repeat these behaviors in the future. This happens because you literally train your brain to act in these destructive ways. If you perform poorly at walking away after losses, then you become much more likely to fail at walking away after future losses. So how do we change this destructive pattern? It starts with taking one single good action. You do not need to decide right now that you will never engage in bad behavior ever again, because that expectation is completely unrealistic. Most people will still fall into some sort of bad behavior during their trading journey. Change starts with making that first good decision. That first time you walk away from a loss and it does not turn into a spiral day, you become far more likely in the future to continue walking away from those losses. The more frequently you practice this positive behavior, the more likely you become to continue doing it because you are actively building this beneficial habit. You are creating new neural pathways in your brain, and this connects to your self-identity, which we will explore more deeply. It becomes extremely important to see yourself as the type of person who follows risk management rules and adheres to trading plans consistently. It all starts with that one good decision. Now you need to recognize which behaviors have become bad habits for you. Sit down with a pen and paper and write out all the things that you know represent bad habits in your trading. I am certain you will be able to recognize them because you know you engage in these behaviors. Recognize these patterns honestly, and then the next time you go into trade, make it your one sole purpose to avoid doing this bad habit, no matter how badly you want to engage in it. Tell yourself that you will not do this destructive thing. If your problem is oversizing, commit to using appropriate position size just for today. Obviously, This does not mean that your goal is to only do it correctly for one day and never worry about it again. What I am trying to convey is that by committing to that one good action, you will build positive momentum in the right direction for future trading sessions. Unfortunately, there are psychological factors working against us doing the right thing, which leads me to the fourth trap that traders fall into. They crave pleasure and avoid pain at all costs. The brain is naturally wired to seek pleasure and avoid pain, regardless of the long-term consequences. Where does this become a massive problem for you as a trader? First of all, you want to avoid the pain of taking any loss, which ties directly into our first point. You absolutely hate taking losses because you hate experiencing pain. Taking a loss feels painful, and that is exactly why when you take a loss, you immediately want to feel the pleasure of getting back to break even or moving into profit. When you take a winning trade, you love that pleasurable feeling and you crave more of that same pleasure. If you have ever oversized a position, then you experienced how pleasurable it felt when price moved in your favor. Your brain associated oversizing with pleasure and concluded that over-leveraging leads to making money very quickly, which feels very pleasurable. However, your brain fails to recognize the massive pain that you experience when price does not go in your direction and you are oversized. This creates a significant problem because if the mind thinks something is pleasurable, it will continue pursuing that behavior. You can use this fact of human psychology to your advantage. If your mind thinks something is painful, then it will avoid that behavior at all costs. You need to associate oversizing and engaging in bad behavior with massive amounts of pain. I want you to sit down and think carefully about every single time something went wrong in your trading. Every single time that you oversized and took a large loss. Every emotional explosion where you could not control yourself, you tilted completely, and you destroyed an account. Think about the massive amounts of pain that these events caused in your life. Think about the pain of having to restart from zero. Think about the pain of losing that money and the guilt and shame that followed. Think about not being able to tell your family or friends about what happened. Now associate that pain directly with engaging in bad behavior. This will begin to reprogram your brain to understand that doing the wrong thing causes very painful consequences. Doing the right thing provides pleasurable results. Just because there was that one time you over-leveraged and made significant money, that was not truly pleasurable because it was followed by massive amounts of pain. Use human psychology to your advantage by reinforcing these associations in your brain. This leads me to the fifth trap that traders fall into. We allow dopamine to guide our decisions. We let excitement determine our choices rather than actually trying to make money or follow our predetermined rules. We fall into the trap of trading for instant gratification, and you engage in this pattern every day in your everyday life. You watch Netflix because it provides instant gratification. You eat cake because it delivers instant gratification. You drink alcohol because it offers instant gratification. All of these activities spike dopamine levels and make it more likely that you will engage in more dopamine-spiking activities in the future. Listen carefully to what I am about to explain because it is extremely important. The brain operates at a certain baseline dopamine level. If you wake up and immediately go outside to smoke a cigarette, come inside and eat junk food, then drink alcohol, obviously that represents completely destructive behavior. What I am trying to illustrate is that if you engage in activities that spike your dopamine high first thing in the day, like jumping immediately on social media, and then you go to your trading charts, your brain becomes accustomed to that elevated level of dopamine. It will want to maintain that high level of stimulation. If you live your life in a way that constantly seeks instant gratification, then when you approach your charts, you will want more instant gratification from your trading. What does this lead to? This leads directly to oversizing, overtrading, wanting to force results, and wanting to trade outside of your predetermined plan. This represents the demise of most traders because they are not even trading to make money consistently. They are trading because they enjoy the thrill and excitement of a trade moving in their favor when they are oversized. This is the gambler that exists inside each and every one of us. Every single person has a little gambler inside that whispers, "What if" scenarios. What if I take this trade and it works out perfectly? They focus entirely on the upside potential of the trade. They focus on how excited they will feel if it works. They want that instant spike of pleasure. They completely ignore the delayed gratification that comes from making money consistently over long periods of time. This mindset destroys most traders. They enter trading and participate for a while, then declare that trading is too hard and quit completely. They convince themselves they cannot succeed. The problem is that they are not even trading properly. They are gambling. If you are gambling instead of trading, then you have not even given legitimate trading a fair opportunity to work. When you execute trading properly, it should feel relatively boring most of the time. You should not feel overly excited or emotional during trading days. Your position sizing should be calibrated so that if you took a loss, you would not feel overly emotional about it. If you have not yet sized your positions appropriately, then you have probably been gambling rather than trading. This represents a natural human tendency. It is natural for us to want instant gratification. You need to train your brain to love delayed gratification instead. How do you accomplish this? You do this by living your life in a way that focuses on delayed gratification. Cut out high dopamine activities from your normal life. The way that you live your everyday life is the way you will approach trading. I find that when I am eating healthy foods, when I am focused on my work, when I am waking up at appropriate times and making good decisions every day, when I am implementing beneficial habits, then when I show up to my charts, I am already the type of person who engages in delayed gratification activities. This makes it much more likely that I will show up to my charts and do things that I know are correct and will provide long-term results. Obviously, it is not exciting to trade with small position sizes, and it takes longer to reach your monetary goals. However, slower is actually faster in trading. If you are over-leveraged, you will blow accounts and have to start from zero repeatedly. That approach is actually slow because now you must work your way back up from nothing. If you go nice, slow, and steady, slowly increasing risk while focusing on delayed gratification over time, then you will reach your goals much faster. Your ultimate goal involves quitting your job and having consistent money flowing in regularly. This leads me to the sixth trap that traders fall into. They attach unnecessary meaning to events that should have no personal meaning whatsoever. For example, we discussed earlier how difficult it becomes to take a loss because it triggers certain emotions and thoughts inside us. Instead of simply seeing the loss for what it actually is, which is falling on the wrong side of probabilities, we take it personally and attribute personal meaning to it. When you take a loss, instead of saying, "I just fell on the wrong side of probabilities," you say things like, "Why did I do that? I knew that was going to be a losing trade," or "The market has it out for me personally," or "I will never become a successful trader." You are attributing meaning where meaning simply does not exist. The market operates far beyond your personal concerns, and by attributing meaning where meaning does not exist, you involve your ego heavily in your trading process. Not only do you attribute losses to being a failed trader, but you also think a series of wins means you cannot lose. This is when you become overconfident and increase your position sizes inappropriately. This is exactly why you absolutely need to remove personal meaning from every single trade you take. You need to eliminate the stories that you tell yourself constantly. You create all kinds of elaborate stories about trading. You think things like, "Since I have taken 3 losses in a row, that means the next trade has to be a winner." Or you think, "Since I have taken 3 wins in a row, I am on a hot streak and should increase my position size." This is what your ego is doing, and this is what your thoughts are doing to keep you trapped in a cycle of unprofitable trading. Your ego tries to get you to engage in behavior that does not lead to success. Success requires following a plan, following your rules, and being consistent over long periods of time. Success means not attributing unnecessary meaning to anything. It means just showing up to the markets every day and saying, "This is what I am following, this is what I am doing. Whatever happens within that framework is not personal to me." It becomes very difficult to do this if you do not understand how your ego operates and how your thoughts work to sabotage your success. This leads me to the seventh and one of the biggest traps that traders fall into. They allow their ego to guide their decisions. They are not letting logic guide their decisions. They are not letting their predetermined plan guide their decisions. They are letting their mind guide their decisions instead. The problem is that the mind does not want to stick to your trading plan. The mind will sabotage you because the ego does not want what you want. Tying this back to the other traps we have discussed, the ego does not want to take a loss. The ego wants to be right about everything. It attributes unnecessary meaning to things where meaning should not exist. The ego does not seek context or long-term consequences. It simply wants more dopamine and more pleasure immediately. It does not understand the context that certain behaviors will lead to long-term positive results. It tries to get you to engage in addictive bad behavior. If you are building bad habits, your ego tells you to continue engaging in bad habits because it operates like a computer program. What exactly is the ego? It is your own mind, and most of us are completely identified with our mind. We think that we are the mind itself. When the mind tells you to do something in your trading, what do? You follow that mind and do exactly what it wants you to do. This is why you absolutely must develop deep levels of self-awareness. If you are not deeply self-aware, then I honestly do not see how you can succeed as a trader. You need to become aware of all these tricks that the mind plays on you constantly. You need to become aware of when you are about to take a bad action and interrupt that cycle in the middle of it. You need to take the opposite action instead. If you do not have a buffer of awareness, then it becomes impossible to change course and do something different. This awareness proves very difficult to build because the mind operates like a raging river. You are so accustomed to being identified with and believing in your mind that it constantly takes you over and makes you engage in self-sabotaging tendencies. This is why it feels like there are two people inside of you, because there actually are. There is the animalistic mind that does not have your best interests at heart. Then there is you as the consciousness who wants to do the right thing. You are constantly being pulled into and distracted by your mind. The way you overcome this is by constantly maintaining self-awareness. I mean constantly, from the moment you wake up until the moment you go to bed. Not just while you are trading, but in your everyday life with everything you do. You notice what you are thinking. You notice what you are feeling. By building this deep level of self-awareness inside yourself, you can really start to recognize patterns clearly. You can really start to recognize bad behaviors while they are occurring. If you do not have this buffer of awareness, then there is just the trigger and then the automatic response. There is no space between the trigger and response. This represents one of the biggest pieces of human psychology that holds us back, and it ties into everything else I have discussed because you need to be aware of everything we have talked about. You need to be aware of when dopamine is guiding your decisions. You need to be aware of when the gambler is taking over your thinking. You need to be aware of tilt and frustration as it is occurring so that you can step away from the charts. Most of the time, what happens with tilt and frustration is that it builds slowly over time. It starts with just a little annoyance. That annoyance transforms into frustration, which transforms into anger. Then suddenly you find yourself completely tilted, annoyed, and angry at the market. If you can catch these emotions in their initial stages by thinking, I am starting to feel some frustration right now, I am starting to have angry thoughts, I am starting to attribute meaning where meaning does not exist, then you can intervene early. For example, you take a loss and you say something like, the market is always out to get me. I cannot believe this is my third loss in a row. You start creating elaborate stories. Then what happens? Your cortisol starts rising. You start becoming emotional. You start having narrow focus on the market. You stop seeing things broadly and clearly anymore. If you allow yourself to go too far down this destructive path, then it becomes very hard to stop the snowball from rolling because you have already picked up so much momentum in this direction that it becomes very difficult to walk away from the charts in that state. You need to catch it in its initial little spark, its initial little flame. You do this by having deep levels of self-awareness and observation. I am not talking about meditating for 30 minutes when you wake up in the morning. I am talking about making this your entire approach to life if you want to be successful in trading. This will also make you a happier human being because the mind operates like a stress machine. If we are focusing specifically on trading, you need deep levels of self-awareness. I simply do not see how someone succeeds long-term for 20 years without eventually destroying their account if they do not understand themselves on this deeper level. This ties into the eighth trap. First, you need to understand that you are not the mind before we can even discuss this concept. Once you understand that you are not the mind, you can change your self-identity. You can change your beliefs and the way you see things. The way we see ourselves and the beliefs we hold deeply matter tremendously when it comes to trading success. If you see yourself as a failed trader, you will probably engage in actions that a failed trader does. If you see yourself as a gambler, you will probably make more decisions that relate to gambling. You may be holding on to sabotaging beliefs and identities. I mentioned earlier how, when you take a loss, it goes beyond just the loss itself. It also triggers these identities and beliefs that we hold. It ties into giving unnecessary meaning where we should not. Once you start becoming aware of your thoughts and recognizing that they are not who you are, you can start rewriting the way you think about yourself. You can start rewriting the beliefs that you hold. You do this by noticing when you are repeating a story. You notice when you are repeating a negative pattern and implant a new positive pattern in its place. You notice in the moment that you are saying, "I am a failed trader. I will never succeed." Instead, you say trading success is easy for me. I always do the right things. I always follow my plan. At first, this will feel wrong because you believe the opposite. All you have done is build bad habits and engage in bad behaviors. When you tell yourself that you are the type of person who does the right thing, your brain will not be on board at first. That is why you need to constantly notice when you are telling yourself these negative stories and just start rewriting these beliefs. You really need to make it a priority to identify these negative beliefs and negative self-identities that you hold. I would watch all day long to see what your mind says about your trading while you are doing it. Before the session starts, what are some of the common things that you consistently tell yourself over and over again? This all ties into your actual behavior itself. You want your behavior to align with what it takes to be a profitable trader, but the stories you tell yourself hold you back from actually doing that. You might be saying to yourself, "Just one more over-leveraged trade, I will eventually follow my rules, but for now I am just going to over-leverage." Why does this happen? Because the brain wants that dopamine hit. The brain wants that pleasure. You are holding on to beliefs that by engaging in this wrong behavior, you will get somewhere positive. Tying it all together, when you associate pain with doing the wrong thing, when you change your beliefs to start believing not only that you are a profitable trader, but that bad behavior will always lead to negative results, when you truly believe that, you will stop continuing to engage in bad behavior. By changing the way you actually see yourself on an internal level, and by understanding that you are not the mind, but you are the observer of the mind, you can start having control over the thoughts you think and the behaviors you take. I will say that this takes considerable time. You are not going to listen to this and tomorrow become a Zen master who never follows destructive thoughts and never gets taken over by the mind. It takes substantial work, but it is absolutely worth the effort. The more you can interrupt your patterns in the middle of the cycle, in the middle of bad behavior, the more you will continue to do the right thing, the better habits you will build, which will lead to a positive upward momentum cycle. As you see the profits start flowing in from your good behavior, you will start getting pleasure from doing the right thing. You will associate pain with doing the wrong thing, so you simply will not want to engage in destructive behavior anymore. When you reach this stage where you start mastering all these concepts together, you can start pulling consistent money from the markets. You can consistently and predictably extract money from the markets, and you can slowly scale with time so that you can build the life of your dreams.